Hey everyone! You might think the EV industry is moving forward as usual, but something massive is unfolding in China that could completely flip the script. And no, this isn't just about NIO, it's about a powerful shift happening across the entire electric vehicle market. Right now, China's EV sector isn't just growing, it's hitting historic highs. But what does this mean for EV investors? Could this be the turning point for companies like NIO? And are gas-powered cars finally losing their grip on the market? In today's video, we're diving into the latest data, explosive growth trends, and the signals that show China's EV future isn't just promising, it's unstoppable. This is not financial advice. Please do your own research. Something quite remarkable is happening across China right now, something that could redefine the entire future of the electric vehicle market. In this video, we're shifting focus away from just one company like NIO, and instead zooming out to look at the broader landscape of China's new energy vehicle NEV market. Because what's happening here is not just about one automaker, it's a story about momentum, shifting consumer behavior, and a massive transition from gasoline to electric. Why is this so important to pay attention to? Because as the NEV market expands, it sets the stage for the success of EV companies across the board, NIO included. Every jump in adoption rates signals increasing confidence from everyday car buyers, and one of the most powerful ways to measure this confidence is through something called the penetration rate, the percentage of vehicles sold that are electric or hybrid, compared to traditional gasoline-powered cars. So let's dig into the numbers. From June 1st to June 8th this year, China's retail vehicle sales were up a stunning 40% compared to the same period last year. But even more exciting is the penetration rate of NEVs in that window, a massive 58.8%. That means that almost 6 out of every 10 new cars sold in China in that time frame were either electric or hybrid. It's a major shift, possibly the highest penetration rate we've ever seen in China's automotive industry. Now, when we look at the year-to-date YTD penetration rate, we see it sitting at 49.78%, which is astonishingly close to the 50% mark. For context, last year's final YTD penetration rate wrapped up at 47.9%, which was already impressive. But now we're seeing numbers that suggest NEVs could officially outsell gasoline vehicles across the entire year for the first time ever in China. This is a turning point. It's not just a blip on the radar. It's a clear sign that consumer preferences in China are shifting. And when more people choose NEVs over gas cars, it means better prospects for all the major players in this space: NIO, Li Auto, Tesla, XPeng, and of course, the current giant, BYD. Let's break that down further. The fact that nearly 59% of all car sales in the first 8 days of June were NEVs suggests that we're entering a new era. The public is no longer hesitant or skeptical about switching to electric. Many have already made the leap. This kind of growth fuels optimism not just for NIO, but for the entire ecosystem of EV manufacturers operating in China. For long-term investors and EV enthusiasts, this is the kind of data that gives real hope. It tells us that the NEV market is not just surviving, it's thriving. And it's likely that the brands that have been investing for years in innovation, infrastructure, and customer trust will be the ones that benefit most. NIO, for example, stands to gain significantly as these trends continue. Another important aspect to note is that this isn't just about the number of cars sold, it's about the rate of growth and the sustainability of that growth. The Chinese EV market sold around 12 million NEVs last year alone. With this year's growth trajectory, we could very well see that number rise substantially. So the idea that NIO could sell 2 million vehicles in the next few years, a milestone some critics claim is necessary for survival, actually doesn't sound so far-fetched anymore. In fact, there was a professor who claimed that unless companies like NIO, Li Auto, and XPeng reach that 2 million sales milestone soon, they may not survive. But if the market keeps scaling at this pace, and given China's market potential, the fear of bankruptcy might be far less valid than it seems. Because remember, this is not a zero-sum game. As the pie grows, there's more to go around for everyone. And NIO isn't just relying on car sales either. Unlike many of its competitors, NIO has diversified into additional revenue streams. Its battery swapping technology, for instance, sets it apart in a very meaningful way. This service gives NIO a unique competitive advantage and helps build customer loyalty while reducing concerns about range anxiety and charging times. So even if NIO doesn't hit exactly 2 million car sales soon, its overall business model is still robust. And while BYD currently leads the pack in terms of total NEV sales globally, we may soon start to see more competition creeping in. Brands like NIO are becoming more aggressive, more innovative, and more in tune with consumer expectations. Eventually, BYD may no longer hold the top position as tightly as it does today. The dominance of one company doesn't last forever, especially in fast-evolving markets like this one. Just imagine, if China ends up selling 20 million NEVs annually within the next few years, would it really be unrealistic for NIO to capture 2 million of those sales? Given its growing brand recognition, loyal customer base, and solid product lineup, NIO is well positioned to take advantage of this rising tide. And as they ramp up production and expand to international markets, their share could increase even further. This is why watching market-wide trends is so crucial. It's easy to get caught up in quarterly earnings, stock price fluctuations, or individual headlines. But the big picture penetration rates, consumer behavior, infrastructure development, this is what determines long-term success. The growing comfort level among Chinese consumers to switch from gas-powered to electric cars is a clear sign that the EV transition is accelerating. And when this transition becomes mainstream, legacy automakers will find themselves playing catch-up. Meanwhile, companies like NIO, which were born into the EV space, will be thriving. So yes, these numbers are good news not just for NIO, but for the entire industry. They tell us we're heading toward a future where EVs dominate the road, where infrastructure supports clean energy, and where innovation continues to drive progress. And for those of you who've been holding onto your EV investments, waiting patiently through the ups and downs, this is your moment of validation. The patience, the belief in clean energy, the trust in innovation, it's all beginning to pay off. Because make no mistake, the future of transportation in China is electric. And the companies that have been preparing for this shift NIO, BYD, Tesla, Li Auto, XPeng, they're the ones poised to lead us into this bold new era. Thank you for joining us today. If you enjoyed the video, don't forget to hit the like button and subscribe to our channel for more stock predictions and market insights. Remember to turn on the notification bell so you never miss an update. Happy investing, and see you in the next video.